Hello, my name is Robin Dunbar, and I'm the president and CEO of Grid Metals. Grid Metals is a Toronto-based exploration and development company, and we're focused on nickel, copper, PGMs, and lithium in Canada.
Robin, lovely to meet you. We've not met or spoken before, so I appreciate you coming on the show. We are going to learn about your company today. Maybe it might be worth kicking off and understanding a little bit about you. What's your background that's relevant to what you're about to talk about?
Sure. I've been in this business for 25 years. Before I was in commercial and corporate banking. I did that for about 17 years. I think one of the things that translates really well to the mining exploration and development business in the junior sector is that there's a lot of risk. And in the financial world, that was the focus was on risk assessment. So, people ask me what was the holdover there? That's I think a useful skill.
Right. And so tell me a little bit about the team that's supporting you on this, because you're a company of a certain size, you're sub 20 million market cap. Decision making is important at this level. So is capital. So I want to understand who's supporting you with, what is a very early stage exploration play. That's right.
Doug Harris is our CFO, and Doug just joined us recently. He's an experienced CFO. Dave Peck is our Vice President, Exploration and Business Development. Dave is he has an extensive background. His last job before joining us, he was the Vice President with North American Palladium, and they were successfully bought out by Impala Platinum. That was at the end of 2019 for $1 billion. Dave was in charge of all the technical and resource development there. Before that, he ran global nickel exploration for Anglo American for a number of years. So Dave's very experienced, has been around the world, seen many nickel deposits. He has a PhD. He understands exploration, how the deposits form, where to look for them, that type of thing. So Dave's a great addition to our team. We just hired Kerry Galischuk. Kerry is a geologist. He has a lot of experience in lithium. He worked at the Tanco mine in lithium development and exploration for a number of years, and he's written a number of papers on lithium. So it's hard to find experienced lithium geologists, and Kerry's a great addition to our team as well. And those are kind of the key players. And, we have a very extensive team of consultants. As a junior, we use a lot of consultants, people that we can go back to and trust. One of those people is Ian Ward. Ian he was the president of the consulting firm Micon up to about 2009. And Ian was running our project development team back during that period up to when the global financial crisis hit. And Ian's rejoined us now as a consultant as well. So he's going to take over our project development.
Gotcha. Okay, I appreciate that. And just a little bit more on you, if you don't mind. Like you're formerly director of Western Areas,
yes.
Nickel. So nickel seems to be your thing. You're also current director of McEwen Mining. So how much time and effort are you allocating to this company?
Well, I my full-time job is Grid Metals. My part-time job is a director of McEwen Mining, and directorships take more and more time. But I tend to do my reading at home at night on the directorships.
Okay. So let's get stuck into this, because I'm trying to, like I say, it's a relatively small story, but nickel is of the moment, especially nickel sulfide up in Canada. So let's start with how did this kick off? How did you acquire the various assets that you've got within the company? Maybe start with the nickel first, and then we'll move on to the lithium in a minute.
So our company is a bit unique in that we've been around since the company was actually formed in 1997, and we've been through a number of cycles. Palladium, we saw the Palladium boom happen in early 2000. Then we saw the nickel boom happen in 2006 to 2008, and it was during that time that we acquired a lot of our key assets. So we've had some, I call them legacy assets in the company. And, they didn't make it into production in the last cycle, but we've managed to hang on to them. One of the features of our properties that they generally tend to be quite large land positions, but we've paid them off and we don't have any payments. So the carrying cost is extremely low.
Which ones are those?
So our Bannockburn nickel project we bought from Outokumpu Mining back in 2003. and that's a big land position. Our Manitoba property, Makwa Mayville, we acquired that from Falconbridge and a private vendor. That was 2004, 2005. And so those are the two kind of major projects we're working on right now. We also spent a lot of money on our Palladium property, East Bull Lake. That property we acquired, I think in the year 2000 from prospectors, and we've spent a lot of money over the years. So again, that's like a 80 square kilometer property. But if you're going out and staking those today, you got to spend a lot of money, and we have these assessment credits banked, and so we were able to hang on to our properties for almost nothing.
Okay,
so very
right. That's interesting. So I was trying to work out how you were characterizing different projects in the portfolio. So your two, let's go, flagship projects in terms of Bannockburn and Makwa are the ones that you referred to as not getting to production last cycle. In fact, there's some ways from getting to production. So, and you guys have been around for a while, so the company's been around for a while. So what I need to understand is what's the plan which says that this time around the company is serious and intent on moving those two key projects forward, right? You're sub 20 million market cap. So let's get into it.
The thing we're working on right now as a priority is our Makwa Mayville project. That's the nickel project, and it also happens to have a lithium property virtually on the same property. So we're kind of dragging that along as well, given what's happening in the lithium and the pedigree of that potential there. So, but Makwa Mayville, we were always serious about it. We put in $25 million in drilling, exploration, development on the project. There's two deposits to that project. The nickel project, the Makwa, we actually did a pre-feasibility study on that project in 2007. We bought a mill to put it in production. Western Areas, who was a major shareholder of our company, they still are a shareholder. They're being acquired by IGO right now. But we were working with them very closely in trying to get that property into production. So we were in feasibility, we were doing community meetings, all the things you do. And then what happened was the global financial crisis hit, and the price of nickel went to $4 from $12. And there was no way that the property, was going to have a chance. So it needs a certain nickel price to get into production. So, we basically mothballed the project until such time as the nickel price rose again, and there were reasonable economic prospects to get the project back into production. In the meantime, we acquired a second deposit in that area, the Mayville project, and drilled off another open pit resource, and that's a 30 million ton lower grade copper nickel project with PGs, but significant project too. So now the last economic study we did was in 2014 that looked at, can we combine those two projects, put a central concentrator in, and take all the ore and put that through one concentrator. So that's what we're coming back to now, because it's our most advanced project.
Okay, so just right, the 2007, 2008 PFS and the 2014 PEA in Mayville. And you said, right, we need a more positive nickel price. You certainly got it right now, okay? Hence, I guess why we're talking. But what did the PFS suggest the economics needed to be, or what the economics would be at what price? I haven't looked at the PFS.
Sure. So let me refer to the PEA, which we did in 2014, because first we did a PFS strictly on the nickel deposit. We did a PEA on the combined. At 850 nickel and 350 copper, the NPV was about 125 million. The internal rate of return was about 15%. So it was, not great, but, on the line, right? So the project needs to get better. And, so that's what we're focused on now. How do we improve the project metrics to get that project over the line?
So what is the plan? Because you're right, the scale just isn't there. It doesn't seem to be really there to make it attractive. So how do you move that one forward? Do you say we are going to drill a whole bunch more this time around? We'll leave the studies for now, or do you say we'll carry on down the study process?
Sure. So what we're looking at now is the two things. Number one is can we reconfigure the resource that we have to make it slightly smaller, mine the best parts of both those deposits, and get better project metrics from that. The second part is putting more high-grade resource into the model upfront really adds to the project, right? So we're doing both those things. We've just drilled 10 holes on the Makwa nickel deposit, so we're looking at that's going around testing some of the targets that we think have potential, and we're working on the project metrics in terms of reconfiguring the project, making it slightly smaller. And also, we did since 2014, we've done a fair amount of metallurgical work, and we did that with the Glencore lab in Sudbury that significantly improved the metallurgy on the Mayville deposit, in particular the nickel, and showed that the cobalt's recoverable. And so, we're going to put those factors into our financial model, and hopefully come up with a PEA in the nearer term that will show people, okay, this project is deserving, particularly when you look at the potential for the exploration results that we hope to bring forward to market in the next few months.
But deserving on what? I'm trying to understand the game plan here, because you would need to significantly increase the scale of it. It's not the scale. It's not the scale. It's really the grade, and by enhancing the grade, getting more upfront cash flow, the project economics will be improved significantly. So just to give people a sense, there's about between 3.5 and 4 billion US of metal sitting in two pit-constrained open pits that is forming the basis of those projects. So roughly a 2 million, if you gross value, like 2 million ounce gold deposit. Now, there's nickel, you don't get the recoveries and stuff, so that your net smelter return is going to be less. But the project has a very attractive mix of metals. So it's nickel, copper, cobalt, palladium. There's a strong palladium to nickel ratio in the nickel deposit. So it's a very attractive mix of metals, right,
as well.
Okay, so you'll be able to put out a kind of nickel equivalent number. I mean, what did it say previously in the previous PEA in terms of a nickel equivalent?
We never used nickel equivalent in the past, but the copper equivalent of the Mayville project, which is the 30 million ton, is close to 1%. The nickel equivalent is close. It's about 0.9 in the nickel deposit. So that's about 7 million tons of 0.9% nickel in that pit. And then there's a couple million tons of similar grade underground. That's something that we think could make sense to try to expand as well. When we developed it previously, we did a lot of drilling, and we're really into the whole project development phase. We were not doing a lot of exploration at the time, and since then it didn't really make sense to spend money on something that was going to be developed down the road when the prices were higher. It just didn't make sense. Wasn't a good use of shareholders' money. Now with Dave Peck with us, we got we got a nickel guy. We got the right environment, and so we're really plan is to hit that project hard.
Okay, so I might just introduce. We're going to explain how you did it later, but you raised $6.3 million, and
yes,
it's a nice structured way. So let's just focus on the number rather than how. We'll come to how in a minute, which is right. So how much money are you allocating to the Makwa Mayville assets? Let's say imminently over the next year at the end of 2022, and what precisely will you be doing with that money?
Sure. So we've just spent about, this Canadian dollars, about 800,000 on the drilling and related work that we did right now, And we'll get those results back and look at them, and hopefully what that'll say is, okay, you to add more resource, you need to go to this area and this area and spend more money. So that's going to be probably a couple $1 million of additional drilling, but we don't know. Like, we want to get the results first.
When are they due? When are they?
They're going into the lab now, so okay. we'll have results coming out in the next few weeks. Yeah,
really that quickly, because we're seeing and hearing a lot of delays.
There are a lot of delays, and we had a lot of delays on our Bannockburn project, just as reference. But we've switched labs, and if we pay more, we can get the results sooner. So there's a bit of a trade-off. Sometimes it's hard to tell particularly at the Makwa site. The sulfides are not flashy sulfides, so you need to assay a lot of core. In that case, starts to become quite expensive. Some holes, if you're drilling a massive sulfide horizon base metals, you have a better idea. So it makes more sense.
Okay, so with regard to your intent on Makwa Mayville, I guess is that sort of intertwined with, because obviously that's over at Manitoba, and then it was the Bannockburn is over in Ontario.
Ontario, yeah.
I'm interested in how you start shaping this portfolio of yours, because you mentioned Canada Nickel in the Northern Ontario description. So what's the game plan?
So we've just drilled 8 holes there. I think it's fair to say that we've seen similar results to what Canada Nickel had in their drilling. We had done some metallurgical work before that, way back, that indicated the nickel was associated with hazelwoodite, the high tenor nickel. So we're going to go back and take a couple of domains from the areas that we drilled and really find out, okay, how much of the nickel is sulfide nickel? How much reasonably can we recover? And, that'll give us an indication of tons and grade that we'll need. Do we have the right dimensions? Do we see 1 to 200 million tons that we could, mine from a pit? And so the metallurgical work, which is, we'll spend, $25,000 to $50,000 on that, and then it'll probably take a few months. That'll tell us a lot. And that'll be either a green light or a red light for us going forward.
So, okay, let's assume it's a green light. What's the green light working towards? Because is that something I guess you want to work out? Could it stand up alone?
Yep.
Right.
Yeah.
And then what do you do? Because you've got, again, coming back to this, the size of the company, the kind of cash constrained nature of junior explorers, which is you kind of got to pick your battles, right? So with Bannockburn, you mentioned Canada Nickel, and I just wondered why you mentioned Canada Nickel. It's a nice corollary and possibly here.
Well, it's the exact same model as that they're trying to do.
Right.
Is big, low grade, bulk tonnage, scale, and those things require good metallurgy and scale, and you have to do the work to get a sense. Okay, will it work? Right. We don't know whether we have enough scope for 200 million tons, 100 million tons of the project. I don't know. And it depends a lot on the metallurgical recovery. How much of the nickel is in sulfide? I would say that, for a junior, for us with our market cap, that's a big nut to swallow right now. So, if things go the way we hope that they go, we see a clear path to, more value for shareholders in the Makwa Mayville project currently.
Gotcha. Okay.
So,
gotcha. Yeah. Well, no, I think that's smart. But you've got to go through some processes and try and add some value. And anything that you do, whether you got to decide, can I go and raise the money efficiently to move it forward further, or do you flip it out and move it on and get focused? Okay. No, I just want to understand, because it was just the way it was worded. I thought it was trying to work out. You're giving us clues there, or was just me?
Well, we like the project because it is. We think it's a really interesting model, and it's something that as Mark says, I think it's the next generation of nickel projects. The the grade can be pretty good if the sulfide's recoverable. It works out to us, a pretty good NSR per ton. So it might be a doable project. I think for us, we want to show that the bones are there for a good project, and maybe we have to bring in a partner or on the project. But everything we do is kind of one step at a time, right? And we had a pretty measured approach to our exploration. We think we're going to see some zones of sulfide nickel there. We saw that before, and so that's positive. But I don't know exactly where that one's going to go in the short term.
Right, but you've got a work program there. You'll let us know what you decide.
Absolutely.
Right. Yep. Okay. So that's fine. And so I'm just going to skip through these, but I do want to come back to the Makwa Mayville, given it seems to be focus of attention. So there's obviously, I think you mentioned East Bull Lake, right? Already, and that's again early stages on that one. So you can give us a little overview.
Yeah. So I mean that's a layered intrusion. It's got a palladium kind of halo, low grade disseminated mineralization in a layer. Pretty well everywhere you drill in the intrusion, it's amazing. And then when we were drilling, we had a couple of small, narrow intercepts of high-grade massive sulfide in the footwall. So excuse me, I'm almost getting out of my realm here because I'm not a geologist. But so what we did was we took all the data, and one of the consultants that Dave works with is a guy named Reed Keys, Dr. Reed Keys, who's based in Australia. He's one of the guys who writes all the textbooks about nickel and PGs. And what he's basically saying to us with Dave is that the way that the deposit has formed, the halo of palladium mineralization is related to the massive sulfide. So that's one big fractionated system. And so the direct analog to the model of that is Sudbury. And this property is about an hour from Sudbury. It's kind of on, there's some things that, are very, very similar from a deposition model. So then the question is, okay, well, what does that mean? It means that if we can drill through the disseminated palladium layer, which we were looking for before, and into the footwall, we can look for both targets. We can try to find the really high-grade massive sulfides, which people find in Sudbury, and the lower grade disseminated on top. And so this model says that there's a reasonable case that should be there. Now, we've flown the whole property using EM, and we have literally, kilometers of these targets to go after. So, we need to prioritize what those, what are the best areas to go after, and then go do some widely spaced holes, downhole geophysics, and see, okay, do we have something in the footwall that could be an interesting target? So that's again, to get to the next stage for that, it's not going to be a huge project, but we've really advanced that project in terms of its potential. And again, it's something that, we think might be of interest to the market down the road, or the industry down the road. Yeah.
Yeah. I mean, you're in the right zip code, I guess.
Very good. It's very good zip code.
For sure. So, and then you've got a few sort of, again, sort of early stage exploration type, projects, which you mentioned, or to sort of tip your hat towards in the shape of Fox River and Thompson East. But are you spending any money there? Time, effort?
We're doing compilation. So the Fox River Belt is it's on the margin of the Superior Craton. We have a 95-kilometer strike length that we acquired by mineral lease. So who's that going to appeal to? That's going to appeal to the big companies that are, including Bill Gates has a company, and BHPs and Rio Tintos, all the majors that are looking for actual sizable nickel domains to go and look for nickel in the right geological environment. Those are very rare. That's why we picked that up. We acquired that. I think our acquisition cost was about $80,000, and our carrying cost is cheap for the next 4 years. And we have millions and millions of dollars of data, airborne, ground geophysics, geochem surveys So somebody's going to look at that, and it's not grassroots. It's at the drilling stage, and that one we definitely want to go and bring a partner in. So, that's the outreach we're doing right now.
Got it. Okay. And we'll skip on to lithium, and then I want to come back to how this thing gets moved forward. Okay. So Donna Lake Lithium, it's in the package. It's actually part of the reason why you got the money recently. So why don't you tell us about Donna Lake, and then we'll talk about the actual structuring of that funding that you raised.
Sure. So the area we are in southeast Manitoba, the Bird River Greenstone Belt, is home to Canada's only producing lithium mine, which people don't realize. That's the Tanco mine, which has been operating since 1968, and it was just acquired by a Chinese company, Sinomine, who's put in a small lithium spodumene circuit. So, and before that, they produced lithium, tantalum, and they currently produce cesium formate as well. So, it is the belt is host to the Tanco pegmatite, Burnick Lake pegmatite, which was one of the two large, well-known pegmatites. So the belt has great pedigree. There's a number of pegmatite fields around, and the area that we have is the Donner Lake pegmatite field, and there is a 9-kilometer contact where there's a series of pegmatites, very, very little historical drilling, and the pegmatites are these spodumene albite type where you drill into them, and there's, if they're the right type, they're immediately very thin wall rock zone, and then boom, you're right into the spod zone. So what we're doing there is we know where there's a couple of historical showings of pegmatite. There is a historical resource, and we started drilling on one of those dikes right now. And then we're drilling another target that we think might have potential for kind of a dike swarm to be open pittable. And there's a couple other known dikes. So it's very grassroots, but the area has fantastic pedigree, and we know we have a good starting point. We know where there is some spodumene pegmatites to start drilling on. Okay.
So more optionality for you. You're nickel guys. No. Everyone you talk to me about is a nickel guy. Yeah. Obviously, I think apart from Kerry, so again, is that you got to bear in mind your optionality and how you monetize that and when you monetize that. So you let us know. Right. Okay, cool. Let's talk about the money side of things. So I thought it was quite interesting. So it's a mixture of private placement, royalty, and some partial asset sales. Yes. It's great. You got to be creative. So tell us how that all got structured.
Well, Lithium Royalty Corp approached us when they saw the results that we put out from our drilling that we did back in 2018. The lithium market crashed so fast, and we never actually got all the results out before, nobody cared anymore. So it occurred to me when I saw all the activity going on in lithium, and we had this really interesting belt, which Kerry always said was a fantastic place to go look. We put out the results, and boom, we got a call from Lithium Royalty Corp, and they said, we look all over the world for these lithium assets. They've been very successful. What are you guys going to do with that? And would you be interested in some, a financing arrangement? So we had that project on the books for about $500,000, and they were offering a sale. They wanted to buy part of it and put a royalty on, but help, break the logjam. And I think it made sense because, a lot of our shareholders, if we went out and diluted to go into lithium, that wouldn't have been viewed favorably. But when the money came in specifically for lithium, it was less dilutive, and we could use part of it for our nickel assets, it all made sense. Okay.
And so the headline number, 6.3 million, how much did you actually get of that? Have you got all of it? Or was it staggered?
Yeah, we got all of it.
All right. Okay.
It wasn't staggered. Yeah.
Okay.
There was no word staggered in the press release. So there was 1.6. No conditions. 1.6 was a private placement to Lithium Royalty. And, that was at 12 cents. That was, the one thing that we said, okay, well, do we do this? The stock price is down. But it was part and parcel deal. And, there was no fees. There was no warrant on that. And then part of the sale, the rest of the sale was a combination of sale of a royalty and a sale of 25% of the asset. And we also have a grassroots lithium asset in Ontario as well, called Campus Creek, which is, very early stage, but interesting because the pegmatites themselves are very large. So, they're probably layered, and there's, we've seen just a few occurrences of spodumene, but the kind of indicator minerals are quite strong there. So, that's something. We're right next to a company called International Lithium, who staked all around it. And their guys have been in the business for a while. So it's a very interesting area. So, we'll put a bit of money there later in the year and see what we come up there. But it was really a package that we sold to 25% of each property to Lithium Royalty. Yeah.
So I always say to people, what's your relevant experience, right? So we talked about some of the names of the companies that you guys have worked for, right? Your Western area, big. McKeown, big. Anglo American, huge. North American Palladium was a big deal. When big company guys drop down to this size of exploration, the rules are different, right? You got to play the game differently. You've sorted out some of the cash constraints by doing the deal we just talked about. You've got somewhere between $7 and $8 million in the bank at the moment, I suspect. You still got to be careful. What are the things that you can bring from the big boy territory into this space, and what are the things that you're having to sort of tippy toe around and work out how you be more efficient?
Well, I think what the big companies have is capital discipline and knowledge of what is an attractive asset for the industry. And as a junior, usually a junior wants to develop a property and sell it to the majors and or mid tiers. And often I find that junior companies are working on projects that absolutely may never really have a chance to be of interest to those companies. So I think if you have some relevant experience, what Dave does certainly technically, okay, does this geology, does this project have a chance to become a mine someday? May not be a big mine, but a mine. Any mine is a good mine if it can be mined profitably. So I think that's the main thing. The big company experience from a junior experience, it does take different skills. You're always fighting for capital. You're always fighting to attract interest in the market. The higher the metal prices go, the more people are in the market touting their companies and their projects. So that's a challenge. What's the best way to, the best way, if you can do it, other than coming on shows like this, is to find a real project that has, drill results that are going to be relevant in the market. And people are always looking, the smart money is always looking for that. Guys are saying, I want to find something early stage that's a 15 million, 20 million market cap that's going to be 100 or 200 million market cap. And that can be done quickly. And drilling a new project is I think the fastest way to get there. And so that's the period that Grid is now entering, because we're going into a drill intensive phase, not just on our nickel property, but also on the lithium property. And they're different audiences. And some people are just interested, they're just, because of the price of lithium and in the interest, they're just really, really interested in lithium, and maybe partly because it's newer. But in our mind, what we're doing is relevant for both commodities. So it makes sense to do it. Geographically, where we're drilling for lithium is very close to where we're drilling for copper. So the logistics all can, they're not separate. They're really accessed through the same roads and that type of thing. We have a core facility that's all centralized. So it makes sense to, it's not like one project is one side of Canada and the other's on the other. So
no, are there different skill sets required in terms of the way that you drill? And I guess it all comes down to the targeting, etc. But there's no difference really in terms of the drill competency.
Well, I think this is just my opinion. Nickel, a lot of the time it's a sulfide, and it can be squeezed like a tube of toothpaste and go anywhere. Although you can use geophysics, so that's the advantage for, a nickel deposit will generally give you a strong EM response. But the pegmatites, a good pegmatite can be very continuous. Kerry always says it's like having a coal seam. And when we saw that, when we drilled the main dike, which it's only 3 to 5 meters wide, so it's not wide for a pegmatite, but we had some historical drilling from the 1950s, and Tanco had put one hole into it in the 70s. So we went back to to that, and it had been mapped over a kilometer. We did a hole every 100 meters at around 100-meter depth and hit every hole. Not many deposits are like that. Not many, those are easy. You just, okay, there's the orientation, boom, 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 right? So if only, exploration was that easy. But a good pegmatite will be continuous, and there it will be. So, what we're doing now is we're going up to another of the pegmatites on the property, which is about a kilometer away. Same orientation, but this one, the historical results, it showed the dike was wider. So it was, up to 10 meters wide from 4 holes, again, drilled in the 1950s. The only confirmation work we were able to do is find one of the trenches, take some samples, and we got up to 3% in that. So we said, oh, that's a good sign. So now we're doing the same thing where we set back from that showing, and we're going to try to follow that. And my hope is that strike length of that pegmatite goes for 500, 800 meters, a kilometer. I don't know. As far as the farther the better, and that the grade is high. And if that thing holds together, that will be a real fantastic discovery for the company.
So is that process that you've just outlined, right? Is that any different from any other junior in terms of the way they'd go about it? Because I get drawn to statements like, you say, we understand what the big guys want. We understand the sorts of assets that they're after, and therefore I presume that we can paint that picture for them to allow them to understand that we've got that, right? So is the drilling process, is the drill targeting, is the focus and attention different because what the end picture needs to look like compared to a regular junior perhaps hasn't got that big company experience? Would you all do the same stuff? It's just you're a little bit more certain that
I think a smart exploration team, you're going to do the same things. It's not not proprietary. I think it's just, so much of it is just saying, okay, well, this is how much money we're going to spend. This is what we hope to achieve, and this is how it'll advance the project, right? So the work we're doing on the nickel deposit is, we're trying to, we'd love to double the size of the nickel deposits, 7 million tons, and we're not going to do that with 10 holes. But we might say, okay, here's a really interesting intercept. Now we go back and drill, see if we can drill off some resource here, and here's another area, same thing. That's not gonna make Makwa into the size of the deposit that Rio Tinto is going to come knocking on the door, but it could take that project into a clearly, if the financial model, it's going to produce a certain amount of metal, and it'll look very attractive to attract more capital to it. Right. So that's
essentially. So there's no real difference. You say a good exploration team is a good exploration team. So therefore, if that isn't the difference, then you guys, what we see a lot of people coming on board and telling me, oh, we're going to get taken out by X, Y, or Z, or we're going to build the next whatever size mine for wherever they are in the world. It's kind of hard to differentiate, but there's a game that's played down at the junior space, which isn't played at the senior space, which is you need those headlines to attract retail to start investing in your project. Yep. So you need the narrative that you control or try to control. It needs to be different from the big guys. So again, where's that going to come from?
Well, I think the narrative is going to come from the success that we have on the project and explaining to people what it is we're trying to do. I'll just give you an example. So another comparable transaction in the market, I think, is there's 5 or 6 nickel projects that were around 10 years ago that are now being actively worked on. And one of them was the Shakespeare deposit near Sudbury. A company called Magna Metals have that. Now, this deal hasn't been closed, but Mitsui and Company showed up, not a small organization, and said, we're going to buy 10% of your deposit and take offtake for $8 to $10 million. The market cap of that company is $25 million. What does that tell you? That tells me that the end users looking for nickel concentrate and sources of nickel are willing to move down market to the smaller deposits, the smaller companies, and put their foot on these things because there's just not a lot of large sulfide deposits that are looking around. And a larger transaction would be the acquisition of Noron by Wyloo, $800 million. That's a nickel sulfide deposit. It's a great deposit, but that is 500 kilometers. There's no road. That's, they have to build a road. It's going to take, some time to do that. Why would they do that? Why don't they've got a big war chest. They can look for nickel in Australia, all over the world. Well, that's a certain deposit. So we're going to go put our foot on that. We're going to spend 800 million. We're going to outbid BHP for it. So that tells me that the people who need nickel are now looking around saying, okay, where do we find it? Who's got a credible project? So, what makes a credible project? Well, you've got to be able to mine it at a reasonable price. You got to be able to produce a metal concentrate that you can sell to a smelter. That makes sense. Some projects can do that. Others will have more difficulty. One of the advantages of our project, we've actually done a lot of the metallurgy on that. So, we think we can make, saleable metal concentrates. And so that's a big plus when somebody's evaluating what we're doing.
Yeah, I think with obviously the Mitsui deal is a non-binding MOU at this stage.
It's a non-binding MOU,
right.
But how many non-binding MOUs has Mitsui announced in Canada with junior mining companies?
Not a lot, and I'm not sure being negative. I'm just trying to be factual.
Right. Yeah.
I'm trying to be factual.
Yes, absolutely. Okay. And I meant to. I normally would preface that, but
okay.
Yes.
And I think
it's an indication.
It's a very good indication that nickel sulfides across Canada getting the recognition, and the Wiley BHP Noront discussions, very, very indicative of that, and they're going to have to spend $1 billion on infrastructure to even get to site. These are phenomenal numbers, and people are excited about investing into these nickel sulfide projects in Canada. But it comes back, I want to bring it back to, so how does a company like you get noticed? Because I think part of why you're sitting sub $20 million at the moment is the legacy issues, the history of, it didn't quite happen before. People got a bit bored. The market was, not favorable in terms of pricing, but the people got bored, moved on to the next thing and forgotten about you, or they don't necessarily
that's right.
remember it positively. So you need to go overcome that. So the narrative is really important for you guys. Yeah. So that's why I'm asking that question.
Yeah, no, it's very true. And even as recently as the last couple of years, we spent a couple of years working on East Bull Lake, because when Dave joined us, he was Palladium was an extremely hot market. Our project there's no doubt there's a lot of palladium there. Every hole we get palladium. We weren't getting consistent results that it was clearly economic. And the market got bored with that. People who bought in because we were, going to find a major palladium discovery, which, we drilled 30 holes and spent several $1 million. And, we came close. And it may be there, but we didn't find it. And they got bored and they said, we're going to move on. We can make money on these guys. They've got a track hole. So, I think the advantage of our portfolio approach was we actually had other projects that, we had not been moving forward in different commodities that we can say, well, this actually makes time, this is the time to do that. So how do we do it? I keep coming back to it. As a junior, people invest in juniors because they want you to make a discovery and they want the stock price to go up. And that's a very kind of craven way of saying that, of how people invest. But I believe that's, most people, and I do that too. I go around and I look at, I watch your show, I read, the newspapers, all the publications. I'm always looking for that discovery. So when we go out and drill 10 holes, we're hoping to get one or two holes that people will look at and go, hey, that's good. And we think the stock price is going to go up. And then the phone rings and the people say, well, do you want money for that? And this, right? And it just happens, right? And they all call them this. You put out one hole and people you haven't heard from for 5 years, they all call within this,
your best friend. Yeah.
Your best friend.
Yeah.
Didn't you used to be an investment banker? I think you did.
I did.
Anyways,
I always say we used to use this phrase. So you offer people an umbrella when it's sunny, but not when it's raining.
That's right. So listen, I don't know whether that's going to happen, but I think we got a good chance. I think based on our assessment, in nickel, listen, you use a lot of geophysics, and we, one of the last things we did was in 2018. We did a property-wide, EM survey using a really good contractor. And, we got a bunch of geophysical targets that some of them we actually have, mineralization close by. And so now we're going to go and stick a few holes in these plates that look, if they've got nickel of a certain grade, we'll get some tons there. So, it's so risky, right? But I like our chances. So, we got to get out there. And to me, based on the money we have now, that's a no-brainer to go do that. And, we would like to make a discovery. And the same thing in the palladium, in the lithium. I want to go and drill, listen, those pegmatites can swell out. And if we get something that's 20 or 30, meters wide of 1.5%, then the phone will really ring. And, why not, right? It's a fantastic belt. There's the Bernick Lake pegmatite is, 40, 50 million ton pegmatite. It's a great pedigree. There's been no exploration. We know it's 10 meters wide. So, that's good too. So, I like our chances of coming up with something good when we're spending the millions of dollars we're spending, and our shareholders will be rewarded. That's what they want us to do. That's why they invest. I could sit here and say, well, we're going to develop this and do that, and people go, great. I'm going to go buy a stock where somebody's got 2 drills out there and they're drilling. So, that's a fun part of the game. It's exciting, and that's how you you make discoveries and you make the share price go up, and that's where we are.